Hey guys, this is Mr. Oxy coming at you live from Palm Beach in Florida. It is Friday. It is August the 5th. First week of August is in the books. And of course, this week was Occidental's second quarter reporting. And what I'm going to do is go through a quick presentation with you to share why I made the comment saying it was a very good quarter, but not a great quarter. And at the same time, explain why it is that Warren Buffett likes Occidental so much. He almost likes it as much as me. And the reason why I say that is because I was a shareholder in Occidental before Mr. Buffett came along. Let me take myself off the screen so that I can share this information with you and walk you through a couple of highlights. Firstly, let's get the housekeeping out of the way. William Fraser asked a question which is quite correct and quite apt, and he's quite correct to challenge me. Not a great quarter? Are you crazy? What are you talking about? I can't say WTF out loud on YouTube because I'll get canceled. But William, this is what I'm talking about. Simon was one of the guys who picked up on it. In fact, Jimmy below was picking up on it first, but Simon said, I have a question regarding Oxy's Q2 results. Sales were 10.6 billion in Q2 versus 8.3 billion in Q1. Yet earnings were down from 4.88 billion in Q1 to 3.75 billion in Q2. How is that? Also, adjusted earnings were $3.16 EPS in Q2 and $2.12 in Q1, according to Yahoo Finance. Can you explain these numbers? That I don't understand how EPS and revenue can go up, but earnings go down. Jimmy was the first guy to pick up on something that kind of looked like a red flag. What's going on here? He said they had around $14 more per barrel on oil price, 7% more production, $260 million less interest, $2 more of unit natural gas compared to last quarter. It was supposed to be a bigger quarter. That's one of the reasons why I said, Jimmy, it was a very good quarter, but it wasn't great. And I didn't know the reason why because I hadn't had a chance to go into the financials yet. So what I'm going to do is firstly share just a few of the highlights reels from the conference call slide deck with you. So I'm not talking about the transcript or the Q&A session from the conference call, but just Occidental's sales and marketing piece as it relates to the conference call. Their slide deck says we've completed an increased quarterly common dividend to 13 cents per share and repaid more than $5 billion of principal and reduced net debt to less than $20 billion. That is good news. Currently in progress, we are repurchasing $3 billion of shares and we are reducing the gross debt to the high teens with the goal of regaining investment grade credit ratings. At the bottom here, it says dividend growth for the future should be sustainable at $40 WTI. And of course, even despite the recent pullback, we have WTI at more than 2 times that amount. So the sustainability factor is relatively safe at a glance. Some more highlights, $4.2 billion in free cash flow. Beautiful. Almost $5 billion debt retired. Beautiful. The balance sheet repair is almost complete. And $1.1 billion of share repurchases have been initiated. There's that number, $3.16 adjusted EPS. Should have been much higher. Anyway, I'll come back to that one in just a minute and explain why Warren Buffett likes Occidental so much. And then they highlighted the enhanced and expanded Eco-Petrol partnership. That's an interesting one too, because I'm not familiar with Eco-Petrol, and Mike Molesky actually asked the question. He said, I was listening to the Oxy conference call and Vicky mentioned a joint venture with Eco-Petrol. I did a quick price comparison of Petrobras, one of my favorites, despite the high risk, and Eco-Petrol, and they look like they move in tandem with a divergence recently. They have a 22% dividend. Actually, right now, Petrobras's dividend is even greater than that, but who knows where it's going. Both Petrobras and Eco-Petrol are listed on the acquirers multi-screener as undervalued companies. You bet, Mike. These companies are significantly undervalued, super cheap, but of course, higher risk, not only because of the geography, Brazil and Colombia, respectively, but also because of the fact that there are many unknowns, including in the case of Petrobras, the upcoming presidential elections in October. Eco-Petrol is currently trading at $10. That's down more than 30% in the last 6 months. But in fact, just a few months ago, on April 2022, Eco-Petrol was trading at almost $20. So if you bought it at $20, you are down almost 50%. It's not a small company. It's got a market cap of $21 billion. Its PE ratio, so price earnings of 4.44, is almost like free. So a PE ratio of less than 5 is synonymous with free. So it's really cheap. Sometimes stocks are cheap for the wrong reasons, though. So you got to be careful and do a little bit of due diligence here. And the dividend yield, as Mike had mentioned, 22%. Man, that's a good, juicy dividend. How about back to Oxy here? Oil and gas production, they are guiding for Q3 1.14 to 1.17 million barrels of oil equivalent per day. For the fiscal year 2020, for the entire year, does that number look the same as the one above? Guidance for the year 1.14 to 1.17, which is actually slightly less than what they produced in Q2. On the far right of the screen here, you can see the domestic tax rate of 22%. It is what it is, but I'm going to come back to tax in just a minute. International tax rate, they're guiding for 45%. Previously, Occidental was guiding for 50%, but due to some divestitures and reorganization, they are now guiding for an international tax rate of 45%. Overhead expense $2 billion and the interest expense of $1.2 billion. Now, this $1.2 billion number here should or might dip below $1 billion when Occidental achieves investment grade status. This is kind of a cool little slide here. It's included in the slide deck, so I'm not going to go through this one in any detail, except to highlight two things over here. Moderated debt reduction. For the second half of 2022, we are looking to reduce gross debt to the high teens. And for 2023 and beyond, we primarily will retire debt as maturities come due. This is all good stuff. And in general, you can already see at a glance why it is that Mr. Buffett likes Occidental Petroleum. Now let's get into the weeds just a little. The quarterly results, this is Q2 of 2022, oil and gas. Pre-tax income on continuing operations for the second quarter of 2022 was $4.1 billion. I scooped exactly the same paragraph from Q1 of 2022. Oil and gas pre-tax income on continuing operations for the first quarter of 2022 was $2.9 billion. Was $2.9 billion in Q1, is $4.1 billion, or was $4.1 billion in Q2. That's income. And here we're talking about pre-tax income, right? From oil and gas, up 41% versus Q1 when you look at the Q2 number. In addition to that, for the second quarter of 2022, average WTI and Brent market prices were $108 per barrel and $111 per barrel, respectively. Average worldwide realized crude prices increased by approximately 17% from the prior quarter to $107.72 per barrel. That's an uptick of 17% versus Q1. So this is Q1 2022. This is Q2 2022. Same thing here. Total average global production of 1.147 billion barrels of oil equivalent per day, 1.147 million barrels of oil equivalent per day for the second quarter of 2022, compared with Q1's 1.079. So a slight uptick there, not too much, but certainly a greater level of production in Q2 than what we saw in Q1. The quarterly results show the net income attributable to common shareholders in Q1 was $4.676 billion, and in Q2 it's only 3.555, right? So when you look at this at a glance, you automatically will say, like, wait a minute, something is wrong. Everything is up, but the actual net income is down. Now, why would that be, Mr. Oxy? I'm going to come back to that one in just a second and show you exactly what it is that happened and what it is that is going on. How about operating cash? So cash flows, operating cash flow from before working capital in Q1 was $4.1 billion, and in Q2 it's $5.1 billion. It's up almost $1 billion quarter over quarter, which is about 23%. At the bottom of the screen here, average shares outstanding, fully diluted. Fully diluted means we have taken all shares into consideration, including shares that have been allocated to executive compensation plans, like, for example, Vicky Hollop's salary, which is more stock than cash. This, unfortunately, has gone up a bit, which is not really what investors want to see, because we are being diluted. When this number increases, we want to see it go down, and we probably will see it go down as the share buybacks kick into full gear. Current assets, cash and cash equivalents, have gone down from $1.9 billion to $1.3 billion. Trade receivables, on the other hand, went up from $5.4 billion, to $6.3 billion. So we're down a few hundred million, about 600 million or so, $550 million on cash, but we're up almost $900 million on trade receivables, giving you total current assets of $10.4 billion. A quick glance at the total current liability shows $9.7 billion. If the total current assets is greater than the total current liabilities, we have a current ratio greater than 1, which is favorable and desirable. However, if you look at the quick ratio, which is cash and cash equivalents, which is this number at the top right here of $1.362 billion, compared to the current liabilities are usually bills that are due within the next 30 days or so, maybe 45 or 60, depending on how you do your accounting. We see the ratio is very much unfavorable to Occidental because it's not even close to 1. However, Occidental right now has very little trouble servicing its interest on its debt. Right at the bottom of the screen, we see a good picture. The long-term debt, even though it was static for the first couple of quarters in 2021, it slowly declined. Right at the bottom of the screen, you can see it's gone from 35 to 31 to 29, now 25 last quarter, and currently around $21.7 billion. A quick look at Occidental today, and after that, I'm going to wrap it up and tell you why it is that the number is just very good and not great, but why Warren Buffett still likes the company. You can buy Occidental for around $60. The snapshot I took at 1:44 p.m. Eastern Standard Time, so 1:45 this afternoon. Why was it moving? Because it was up 3%, more than 3%. Shares of energy companies are trading higher as oil slightly rebounds amid supply tightness. So today we have supply tightness. And just yesterday and earlier this week, the Chief Executive Officer's office, so Mr. Biden, our fearless leader, his energy department was telling us that we have suddenly reached a high level of inventory, and therefore oil and gas stocks started pulling back. So that was so yesterday, because today we are having a slight rebound because of supply tightness. Who would have thunk? Occidental has a market cap of about $55 billion. Just a week or so ago, it was $61 billion, so we've all taken a hit. The PE ratio at less than 6 is super cheap. Sometimes stocks have a PE ratio that looks good for the wrong reasons. In the case of Occidental, there's not too much wrong with this one. It's sitting way to the left of its 52-week high that it reached just, a month ago at $74. But you can also see right at the bottom in the center, the short interest has grown to over 6%. So there are people who expect Oxy to pull back even more than where it currently is. If you look at equity, which is something we as shareholders should always be looking at, it remained fairly static over the first 3 quarters of 2021, and then popped up a little to 20. And then for Q1, went right up to almost 25. And in Q2, we're almost at 28. So that's a good number as well for us as shareholders of Occidental Petroleum. The free cash flow looks even better. If you look at last year over the same period, 1.5 and 2 billion respectively, now 3.3 and $4 billion in free cash flow, which is a good picture too. So if there's so much right with the company, then how is it possible that the numbers are just very good and not great? And here is the reason why. If we look at income from continuing operations before taxes for Q1 was just over $3 billion, and for Q2, it's almost $5 billion. That is a huge leap, and this is the primary reason why Warren Buffett likes this company so much. However, if you look at taxes, which is not something that you can control to a large degree anyway, except that there are some gray areas that you can play with from an Ebitda point of view. Ebitda, basically earnings before income tax, depreciation, and amortization. The federal and state tax rate for Q1 was $2 billion, but in Q2, it's almost $1 billion negative. And that is a huge swing. And you can see that swing over here because this is more than $1 billion. Income from continuing operations, if you take taxes into consideration, is 4.8 billion, almost 4.9 billion in Q1, and now only 3.8 billion. So the difference, the delta here, is 100% just tax. I've looked through all the financials. I didn't see anything else that looks scary except tax, which is not something that you can control. Unfortunately, or fortunately, depending on how you look at it, when you make a profit, you got to pay tax. Now, if we look at this net income loss, we get a clearer picture of why there's such a differential here between 4.8, almost 4.9 billion and $3.8 billion. There's Warren Buffett or Berkshire Hathaway's $200 million quarterly coupon on their preferred stock. And then you see the net number, so the net income attributable to common stockholders, down by more than $1 billion. And when you dilute that on an earnings per share basis, last quarter's $4.65 becomes this quarter $3.47. And the swing is because of the effective tax rate, which was negative 58% in Q1, and it's 25% in Q2. So guys, in a nutshell, when you look at Oxy in terms of where we are today, and you say, really at its most basic 50,000 foot level, if you say, Mr. Oxy, why is Oxy simply giving us results for Q2 that are very good instead of great, given all the things that were in favor of Oxy for the last quarter? The answer to that is that one line, tax. So at the end of the day, as investors, as people who earn a salary, whatever it is that you do to earn a living, however it is that you are going about creating wealth for yourself, that is something you always have to take into consideration. What's the effective tax rate? How can you manage it? When can you harvest taxes as required, as the case may be from time to time? Those are things that you got to pay attention to and make sure that you get a good grip on as you go along. So on that note, this is still Mr. Oxy, strong, long in Occidental Petroleum, and hope to see good things from the stock next week or so. And who knows, unless the macro changes significantly, things are okay. So if you're long on Oxy, long and strong is probably a good place to be. But remember, there's no reason for not taking profit from time to time, because nobody gets poor taking a profit. So on that note, guys, this is Mr. Oxy signing off. Staying long and strong in Oxy. Take care. Talk to you soon. Bye-bye.